if anybody's got an idea that there's an interest in it. It's just things that we're picking up on that people might want to be at least paying attention to themselves as possible trade outcomes. Now, there's obviously a couple of things that we want to do with this information. We want for people to be able to recognize that bond, by the way, is doing very well. Thank you. Okay, so we had a stock pick here for pre-market. And you'll see the stock pick for pre-market was going to be this TSEM. Pre-market. See how it's pre-market today? So obviously you want to be looking at this stock yesterday at the close, right? So this is something that you want to get ahead of if you're going to do this type of process. You need to get ahead of it at the close. So one of the things we want to do with this TSEM is look into what it trades. It's a semiconductor company. And therefore, we want to look at it in relation to the semiconductor industry. And we can see that it's heavily discounted against semiconductors who have actually had a couple of days of good upside movement. So the semiconductor market has a couple of days of good upside movement. And this is a very, very heavy discount to that price by possibly as much as 10% discounted to the semiconductors over the last few days. There's another couple of things that we want to pay attention to. We would like to know about how much buying is coming in at higher prices. In other words, kind of block trade analysis. So we can find that out by looking at things like PVI and against the NVI narratives. And if this line is angling higher, that's a good sign for a buy trade. We can see the line was angling very aggressively higher during the high volume phases to the downside. That's a good signal that buyers are coming in at higher prices. In other words, they want to get those market maker deals done, for example, on the dark pools, etc., etc. The final piece of information I'm now looking at is I'm going to be looking for whether there was a drop-off in short interest. And we can see that short interest did drop out from this very, very punchy high into the short interest storyline here. So when the short interest dropped here, it's still very high, which means that the squeeze potential in this stock is very, very good. There's a very high probability of a short squeeze when short interest is very, very busy. This is like Delta, isn't it, when you think about it? That's like sellers coming in at very, very low prices. So there's a lot of potential short squeeze available in this trade, yes? A lot of potential short sell squeeze available. And with semiconductors really doing quite good, even if it goes discounted, there's still a chance that you're going to get a recovery because of the potential strength of the semiconductor space. I like the idea, I like the bet behind this. So in last night's business, it was a case of starting to buy up some 35 long positions ahead of what we know is going to be a rough ride. We might have to double down on this one to take advantage of that bid on the semiconductors. So we might have to double down. And that can sometimes happen. You give yourself space to do that. Now, obviously, what happened with the stock is not exactly too difficult to recognize and to probably expect. The stock obviously opened up at $39 and you made $4 profit on a $35 stock. In other words, you made yourself about 12% return on the cash open. And that's when the earnings came out. And obviously, based on that, you can see semiconductors actually gap down. So all you're going to do is you're going to bag and tag your money and say enough, thank you very much at the cash open. And you've made yourself 12%. So a little bit of analysis of the big implied volatility trades, because obviously you want something that's going to have a bit of movement about it. But what you've got to try and do is what we said yesterday. We ran this in Classroom, did we not? I think we did, Kim, yesterday. Or was this a conversation I was having with somebody else? But what I said in Classroom yesterday, I think, was very, very straightforward. If you know you're going to get high implied volatilities on something, your job is not to try and find out why you're getting high implied volatilities as such. Your job is to find out what they make of that higher implied volatility. Are they leaning on the sell? Are they leaning on the buy? What are you seeing in terms of the price of TSEM? What are you thinking about the price of TSEM? In other words, you start doing a little bit of analysis. If you've got access to delta bucket information, for example, you can start looking into the delta buckets and asking the question, what is the delta buckets storyline? What am I seeing in terms of the delta buckets from the previous day? What am I seeing in terms of the price movement of delta buckets? You start looking at those delta buckets across the strikes. You start thinking about whether the implied volatility is strongly skewed on the bid or strongly skewed on the offer. And obviously on the bid, interestingly enough, last night, the implied volatility for that one pop was in excess of 122% for the calls and 100% for the puts. Well, if you know anything about implied volatility, if you're 122 over 120, you know that the dealers are probably more inclined to be looking at this as a spike buy trade. Otherwise, why did they do 120 points on the call side and only 100 points on the put side? So now I'm seeing where that implied volatility storyline, which is a total storyline, of course, but now I'm seeing where that implied volatility breakdown comes in. And that's the devil in the detail that you want to try and establish, is it not? Is that not the devil in the detail? It absolutely is. It absolutely is. So we can start to look into these as elements. And obviously buying this off the 35s yesterday meant that, of course, when it trades at 39 this morning, a $4 profit for a tiny little bit of work is a pretty good trade outcome from a high volatility product trade in TSEM. And we had highlighted this when pre-market was a earnings big implied tomorrow. And that's obviously giving us something of note, a big implied tomorrow. Now, obviously coming into the closing bell, we've got a couple of big earnings releases, but that means you're going to have an overnight exposure on those stocks, because the idea there is you're going to be looking to try and buy into the earnings report. If you get a feeling about what the implieds are doing coming into those earnings, you're going to look at the industry base. You're going to look at where they're going to be positioned. So this stock here at MXL, a stock here at ENVX. Hutton's initiated a big buy in early July with a target of 21. So there is an analyst, a good analyst, who have at least came out and said, you know, I think this is a byproduct at 21s. And obviously that's something that you start building into your knowledge base. And obviously we do have the small matter of Meta, which obviously is going to be quite an interesting storyline this afternoon as well, or post market close. But you can see that it's possible to have some incredible trades like this TSEM trade based on some of the other elements that we see forming in the background about the reduction in the short interest, but still a heavy dose of short interest, suggesting that the short squeeze could be a fabulous trade. And when the short squeeze obviously hits and everybody buys back those shares, we use that buyback as our walk away, and we put the money in the account and we get ready to take the next tradable opportunity. So there wasn't that many. This was one of them. And obviously the TSEM product, an absolute cracking outcome because of the skew we had yesterday as well. And obviously it's up to you, if you're interested in stocks, that these are the types of things you start asking the question about. Can I take a quick hit bid on this one? Can I make a quick profit on it? Do I have a strong enough view about what's going to happen here? Because if I'm wrong, I could be in the wrong side of a doing. But because this price is already heavily discounted to the semiconductor space, I'm in good shape to then look for the fact that I've already got a discounted product. And so long as there's nothing particularly rotten about this company, I should be looking at that discount as a safety net to say to myself, you know what, they've marked down price because they're wanting to be buying this. The big institutions will do that all the time to try and encourage sellers, short sellers to come in. They did a great job of getting a lot of short sellers at lower prices. That's exactly what the pros want to do. They want to get as many short sellers at lower prices as they can, and then they want to squeeze these guys off the numbers. And obviously that's exactly how they did it. They got all these short sellers coming in. They managed to get all that short selling in this area here, and then they squeezed them off the numbers, and as soon as they puke, game, set, and match. That's the trade done. One trade, one hit, one kill, 10% return on your account, guys. One day, 10% return on your account. Nice way to make a living for your pension, isn't it? For sure.